So, are EVs still worth it in 2026? For many Americans, the answer is yes, but only with smart planning. The future of transportation may be electric, but financial survival will depend on how wisely drivers adapt to the changing system. What do you think? Will EV insurance prices continue rising? Or will technology eventually make driving cheaper for everyone again? Comment below with your opinion. And if you enjoyed this cinematic breakdown, subscribe now for more future-focused news, EV updates, and global economic stories. Insurance companies say the crisis may continue getting worse. Extreme weather events, advanced vehicle technology, rising theft rates, and expensive repairs are changing the entire economics of driving in America. Some analysts believe insurance pricing models are entering a completely new era. In the past, premiums were based mostly on driver behavior, but now, software systems, sensors, battery risks, cyber threats, and AI technology are becoming major factors too. The result? A future where highly advanced vehicles may become financially difficult for average families to maintain. But despite the shocking headlines, EVs still offer real savings opportunities. Electric vehicles can dramatically reduce fuel costs. Drivers who charge at home during off-peak hours often spend far less than gasoline vehicle owners. EVs also have fewer moving parts, meaning lower maintenance in many situations. No oil changes, less brake wear, reduced engine maintenance. The problem is not EV technology itself. The real issue is how fast the technology evolved compared to the insurance industry's ability to adapt. So how can drivers actually reduce costs in 2026? Experts recommend several powerful strategies. First, compare insurance providers constantly. Rates now vary massively between companies. Second, use safe driving tracking programs if available. Many insurers offer discounts for careful driving habits monitored through apps or onboard systems. Third, increase deductibles carefully to reduce monthly payments. Fourth, install home charging systems and charge during cheaper electricity hours. Fifth, avoid unnecessary performance upgrades that increase insurance risk. And finally, consider smaller EV models with lower repair costs rather than high-performance luxury vehicles. Because in 2026, smart EV ownership is no longer just about driving electric. It's about managing the entire financial ecosystem around the vehicle. Despite the current crisis, the electric future is still coming. Governments, automakers, and technology companies continue investing billions into EV infrastructure and battery innovation. Over time, repair systems may become cheaper. Battery technology may improve, insurance models may adapt, and competition could eventually lower costs again. But right now, America stands in a difficult transition period between the old driving world and the new one. Experts say Tesla repairs are among the most expensive in the EV industry. Why? Because many Tesla parts are highly specialized and difficult to replace quickly. Some repair shops are not certified to work on Tesla vehicles at all. Others face long delays waiting for replacement parts. That means insurers often pay for rental cars, labor costs, and expensive repairs for longer periods of time. In some situations, insurance companies decide it's cheaper to total the vehicle completely rather than repair it. And when insurers lose money, premiums rise for everyone. Another major factor is autonomous driving technology. Many EVs now include advanced driving systems designed to reduce accidents. But in reality, the transition period is creating confusion. Drivers sometimes trust the technology too much. Others misunderstand what the systems can actually do. And when crashes happen, insurance investigations become more complex and expensive. Who is responsible? The driver, the software, the automaker? As legal uncertainty grows, insurance companies are increasing prices to protect themselves from future risks. For ordinary Americans, this crisis is becoming personal. Families already dealing with inflation, housing costs, and rising food prices are now facing another major financial burden. Many drivers who switch to EVs hoping to save money are questioning their decision for the first time. Some are even returning to hybrid vehicles because insurance costs are becoming impossible to manage, and younger drivers are being hit the hardest. For many under 25, EV insurance can cost more than their monthly car payment itself. America is entering a new financial shock, and millions of drivers are only discovering it now. Insurance bills are exploding across the country. Some drivers say their monthly payments doubled overnight. Others claim they were dropped completely after a single claim. And at the center of this growing crisis stands Tesla. The company that once symbolized the future of affordable electric driving is now connected to one of the most expensive insurance problems in modern America. But why is this happening? Why are advanced electric vehicles suddenly becoming so expensive to insure? And most importantly, is there any way ordinary Americans can still save money while driving EVs in 2026? Tonight, we uncover the hidden truth behind America's EV insurance crisis. Across the United States, insurance prices have been climbing for years, but in 2026, the increases became impossible to ignore. Drivers who once paid $120 per month are now seeing bills reach $250, sometimes even $400 monthly. For EV owners, the situation is even worse, especially for high-tech vehicles filled with cameras, sensors, AI systems, and massive lithium battery packs. And no brand represents that reality more than Tesla. Many Americans bought EVs believing they would save money on fuel and maintenance, but now, insurance costs are quietly destroying those savings. The biggest reason behind the price explosion is surprisingly simple: repair costs. Modern EVs are no longer just cars, they are rolling computers. A small crash that once required a bumper replacement can now damage expensive cameras, radar systems, AI sensors, and battery protection structures. In some cases, even minor accidents force insurers to replace huge sections of the vehicle. And when batteries are involved, the costs become terrifying. A damaged EV battery can cost thousands, sometimes tens of thousands, to replace safely. Insurance companies know this, and they are passing those risks directly onto drivers. What if I told you millions of Americans are suddenly paying double for car insurance in 2026? And the biggest shock? Even Tesla owners are getting hit with insane premium increases. From AI-powered cars to rising repair costs, the insurance industry is entering complete chaos. One small accident in a modern EV can now cost more than an entire used car. Across the United States, frustrated drivers are opening renewal emails and seeing prices explode overnight. Experts say this could become the biggest auto insurance crisis Americans have seen in years. But here's the scary part. Most drivers still don't know why this is happening. Is it EV batteries, self-driving technology, inflation, or something even bigger happening behind the scenes? Tonight, we break down the hidden truth behind the 2026 insurance shock shaking the entire American auto market. Stay till the end, because the final reason could change how you drive and how much you pay forever.